Hey everybody, hope you're having a good day and a good week. The trading week's about to begin, but I just want to do a quick video to recap the action of this past week and also look at some of the big events that are going on and the effect it may have on the market. So the title talks about the MOASS and MOASS Monday. Tomorrow could be a really big day. It could be the start of a lot of things, including the MOASS, the short squeezes for GameStop, AMC, others. But who knows, right? Like every time we get excited about some kind of news, it sort of fizzles and doesn't really amount to much. But hey, one of these times we're going to get it right. Why this week is important, I'm going to get into in the video. So hit that like button, subscribe, and stay tuned. We're going to get into it right now. So first of all, taking a look at GME. We were down 21% for the month. So not a great month for GameStop. And if we look at AMC, not a great month for AMC, down 31%. So GME were up over $200. AMC were in the 50s, and July just hasn't been kind to us. But a lot of the sentiment out there is that summer vacation, COVID reopening, all those things just took people away from the market in general, and especially the retail investors. We need a break. I mean, people need time with their families, needed to get to the beach, enjoy some things while they can. Might be a problem with that, but we'll get into that later in the video overall with society. But right now, just seeing the volume dry up really in AMC and GameStop and in a lot of stocks. So volume is low in the market right now. It's summer, but August has started today, and we're just going to get ramped up again, I think, as we move into later summer, early fall. Looking here at our friend Houston Wade, in just a little clip of a chat he did the other day. I'll play this for you. Someone asked, when would the MOASS begin?
Cam Fingers asked, do you see the MOASS happening in August? I see it happening on Monday if they don't get the debt ceiling raised. That's what I think is it's going to happen by Monday if the debt ceiling isn't raised.
Well, newsflash, the debt ceiling wasn't raised. So U.S. Congress went on a 6-week vacation, I think, 6 or 7 weeks. They didn't raise the debt ceiling, and also they did not extend the moratorium on evictions in the United States. So during COVID, there was a freeze put on evicting people from their homes during COVID. People were isolated, didn't want it spreading. The economy was not good, and so they froze that. And now that's over for renters, and soon in September, I think, over for homeowners who got their mortgage payments frozen. So potentially millions of people in the United States could be evicted almost immediately, I think. So that can have a major, major effect on the economy and the market. And so that's not a good thing, obviously, for people to be evicted from their homes. It's horrible. Market wise, it could be a good thing for AMC, GME, because if the market as a whole takes a big hit, we know these are safer stocks that people are holding on to. And so could see a lot more people pulling their money from other stocks and throwing it into AMC and GameStop. So I think that's the theory behind it. Don't want to get excited about something that's really bad for millions of people, including probably a lot of apes who have invested their savings in AMC and GME. So that's a bad thing, but it could also be a catalyst for what we want to see in the market. Treasury bills could be taking a hit as the debt ceiling goes back into effect. So the Treasury sells these bills. They may slow down or stop selling these bills through the Fed, which again is a way that the reverse repo market is going through the roof right now. It hit $1 trillion, and I don't claim to be any reverse repo expert by any stretch, but basically the banks have way too much cash and they're buying treasury bonds through the Fed and through this reverse repo process. So they put their cash in there overnight. The Fed pays them for doing it, and the banks get richer. But at the same time, the idea is there's way too much cash, which They're pulling it out of the market, changes the liquidity of the market. And anyway, the higher the repo market goes, the worse sign it is for the economy and for the stock market. It's showing that they don't trust much else in the market to put their money into. So this was written in May, and at the time, they were really concerned because the reverse repo market was hitting, I think, up to $294 billion. Um, it got a lot higher since this article was written. It went up to $1 trillion, over $1 trillion this week. So you can see how quickly that rose. And the concern back here was when it was in the 200 billion range, and they said, well, it's never been that high since 2017. And 1 trillion, it's never ever been that high. It's a all-time record right now. So that reverse repo is really a sign of bad things to come. You see here the Fed reverse repo usage tops 1 trillion for the first time ever, and it goes into that a little bit and what happens with the Treasury. So it's trying to spend its money. Everything in economics and is so complicated, and the Treasury is trying to spend money before they get a cap on their debt. And I'll be honest, I don't fully understand it, but I do know that it's a bad financial situation for the economy, and the U.S. risks having their credit rating downgraded again, like it did in 2011, and that really hit the markets hard. So the evictions, treasury bonds, the reverse repo, the debt ceiling, all of these things are potentially negative catalysts for the whole market. The market as a whole could see a big dive, which we are theorizing could be a really big positive catalyst for GameStop and AMC, and that it pushes all of that money that people are scared of losing in the overall market into some safer stocks like AMC and GameStop, where people aren't selling off, and we've proven to be diamond-handed with them, and so they're safer places to put their money. And so we may see a big influx of money coming in to GameStop and AMC this week and in the coming weeks as the economy goes down. And it may not. Like, I'm not an economist. I'm not a financial advisor. Not financial advice. Just a guy who reads a lot of articles and watches a lot of videos and just goes and researches this stuff and tries to figure it out. So my understanding is definitely not complete, but a lot of talk from the big guys like Warren Buffett, Bill Gates, and things. Even in early spring, they were pulling out of some riskier investments and trying to put things in much more secure investments and just pulling out of the market in different ways. So if the rich are doing that, there's a reason they're rich, right? And so I think I trust where the money goes. And so they've been seeing a potential market correction, crash, dip for quite a while. And all of these things that are happening now are probably some of the last signs that they're right, and we're going to see that coming any day now. So good time possibly to invest in some puts or shorting some of those overall market indexes, but also a good time and not advice to buy and hold some GameStop and AMC and really shore up your positions, because that MOASS could be coming any day now. That's the hope. The final thing that I'm going to talk about right now is COVID. Unfortunately, the relaxing for the summer all over the place, and especially in the US, when you see major concerts and millions of people all swarming together in tight groups, maskless, and all that sort of thing, COVID's having a resurgence. There's lots of outbreaks happening, and unfortunately, the fully vaccinated are getting COVID again, and the vaccines seem to be protecting from severe symptoms and death, but people are still going into the hospital, and they're finding that 70, 80, 90% of people going into hospitals have been double vaccinated. So real bummer when it comes to COVID and the possibility of having more lockdowns coming into the fall, and school closures and business closures is a very real threat. And even if that doesn't happen, the market reacts to threats, right, and bad news. And so this is sort of just head at the end of the week, Thursday, Friday. And so we may see some big dips in the market this week as well. So bad news for all of us with evictions and the government possibly going bankrupt. I mean, I'm a Canadian. I'm a little safer, obviously, but the U.S. economy affects the whole world. And now COVID. So bad news, bad news, bad news usually makes the market go down. And if the market goes down, the theory is GameStop and AMC hopefully will go up. And that going up, coupled with the assets that the hedge funds and others have been using as collateral to short AMC and GameStop, will start to fizzle, and margin calls should and hopefully will happen. And so even just the ability to not be able to short as much could just unleash that upward movement of AMC and GameStop, and cause the shorts to have to cover. So will the MOASS happen tomorrow? Oh, I hope so. But we'll see. I don't want to put a date on it. We're always hoping. But all of these news look like dynamite lined up, the fuses lit and just coming down. So it seems like it's only a matter of time before we see some major impact on the market, and hopefully that impact has a really positive effect on our ape stocks. Anyway, apes, that's really all I have for you today. I'm still on vacation. I'm heading home on Tuesday, so hopefully I'll have more time to put out more regular videos and keep up with things a little better. But here's hoping for a really green day tomorrow for all of us apes. Peace out, stay safe,